What's up, everybody? This is Jimmy with Trade Decoded. It is 3:29 in the afternoon, and it is November 19th, 2024. We've been done since about 1 o'clock this afternoon, although I take my lunch break at 12:15. When we got back, we decided to call it a day because at that time, we were doing more sideways trading than anything else. Some very important things we want to talk about today because a lot of lessons were learned. For myself, not so much a learning lesson, but a reminder as to why I need to trust the chart and not my heart. And because of that thought process, I was able to make quick money early this morning on the call scenario. Wasn't very comfortable, and I'll explain all that why, but spent the entire day keeping people out of playing puts except for one opportunity that we found for a quick move to the downside. We had to feed a lot of biases with that move, but the market never gave us the signal that it was a good time to consider puts as far as holding them for long term. Let's get into the chart. Let's talk about what we saw, what we were looking for, and all the things. And then we're going to get into what today's problem gave for a lot of people. We had a very choppy, sparse pre-market. And I was trying to do a charting session this morning. Now, we were selling off into 8:30. And so with no reports or anything, I'm assuming that this sell-off came as a result of Mr. Joe approving long-range missile strikes into Russia and then Russia retaliating by saying, okay, cool. I guess we'll just go ahead and put nukes on the table. I'm assuming the market loves war, but not so much nukes. Whether that becomes a thing or not, it's just a sign of aggression and escalation. It's not really something we want to deal with, honestly, because every moment closer we get, we're dragging the possibility of a World War III coming. That's not exciting to me, okay? And it shouldn't really be exciting to anybody else, and I really hope that does not happen. But long and short of it is, we had this crazy $6 sell-off, essentially $5 sell-off in pre-market, which is crazy. But what this did do was create a whole bunch of put biases. Okay? Fortunately, we didn't keep dumping all the way into the open, because this move back up had to serve as a reminder for myself included. Trust me, I was more irritated that this move was happening at a time that we couldn't take advantage of it, pre-market, and wondering, is there going to be any left to the downside when the market does open? So initially, I felt like I was going to be gung-ho on puts. And truthfully, even though we were putting in higher lows and higher highs, recovering from that drop, I still felt like I wanted to play puts. But here's the thing. I know I'm not the only one who felt that way. So this morning, when we were coming up with our call put scenario, as you can see, our put line is at 583.90. Our call line is a breach. Both of those would have been breaches, by the way, of 584.91. We were hoping for a move up to the pink line. Okay. Still about a 40-cent move, which is nice. Okay. Now, these calls felt very uncomfortable because we couldn't unsee this. So what I had to do to remind people in the community, guys, what if you woke up this morning, you came to your pre-market, and this was all you saw? Would calls still look weird to you? That's what you've got to do to trick yourself sometimes. I'm not denying that I felt like I wanted to play puts today, but before we opened, and I told everybody, again, at 9:25, I told everybody, guys, I feel like puts are what I want to play, but I need to trust the chart, not my heart. I need to trust that the higher lows are bad for puts and that we're more likely to break resistance and continue up to the next resistance. We got to keep an eye on the trend. We got to keep an eye on the cues. We got to keep an eye on ADD. We got to keep an eye on everything that lets us feel comfortable despite what we feel should give us the confidence, meaning we should be looking at these things, and if they're trending up, we should have confidence in following them. Okay? So this morning, we took calls when we were moving up. Some people took them on the pullback of the first candle. Some people took them on the pullback of the second candle. Several people didn't take them at all. Now, I took them. I got in while we were dancing around in this area here, and I played it up to the resistance. Why did I get out as we neared that resistance? 2 reasons. Number 1, it's the pink line is the stink line. Number 2, I still felt uncomfortable buying calls. That's not something I'm trying to hide. So I respect the fact that I don't feel comfortable, so I just took it from line to line. It wasn't a huge win. It was only 11.7% win. Some folks held on to that trade and got rewarded more than I did. If you take a look at the Qs, they were really not moving lower, right? So they broke up. In fact, we wanted the Qs to be above this line of resistance here. It did. We were hoping the Qs were going to make it up through this resistance and up to the blue. Eventually it did. But nonetheless, when we got above this resistance here, we're kind of just looking left for the stair step to find a spot that it's going to stop it. Now, this was quick and aggressive. ADD, oddly enough, opened up very, very red today at minus 1400-ish. And it climbed its way all the way up to about 0. Almost dead even on the day, 0, right around here, and then started to pull back and go sideways. So we've been buying up the bottom the whole time, the overall market was, okay? And we took advantage of a quick move. Now, knowing that a bunch of people were looking for puts and wanting to play puts, I intentionally put our put scenario line a little bit farther down. I told everybody, if we're going to get into puts, I want to make SPY prove to me that it's the right time to take puts. Don't be aggressive on puts today because this recovery is real. It's happening. Would I have guessed that we were going to take it all the way up here? No, I would have never guessed it, but that's not what I'm looking for. I'm looking for all the right reasons to take the right position. I'm not looking to hold my trade for an hour or 2 or 3. And then I'm going to explain to you why I don't like that, because we had somebody who did. And that's pretty much it. So it was a quick 11%, 10, 11, 12%. If you took it, several people ended up with more because they held longer. We needed to stay above the pre-market low line here. That was the stop loss, right? If you get in here, you need to stay above that. Hopefully we continue up. Right? ADD was moving up, Qs were moving up. Everything looked good for the upside. Not comfortable, but good. So for the people who insisted on wanting to play puts, told everybody, guys, here we are. We're at SPY's resistance, which is right here. Okay. Qs at this time were hitting a level of resistance, which was, I think, right up here. Okay. Right here, area of resistance. Is that the time? Is that the time we were doing this? 9:45. Yeah, 9:45. So we were struggling to get by, but I'm going to explain this red box in a minute. I said, guys, wait for the Qs to break trend, wait for SPY to break trend, and then wait for a break of support, right? What I'm aiming for on the Qs, because we were watching the Qs here, I said, guys, Qs are putting in a higher low or lower high. I'm expecting support here to fail, and I'd like to see the Qs run down to 497.31. This support down here. Now, some people got into this trade a minute before me because we recognized that this was potentially going to be a lower high. I got in while this candle was printing, expecting, because of the lower high, support to fail. And then I knew where I wanted it to go down to, which was support right here on the Qs. And as you guys could see, I wasn't looking for a complete reversal and it moved to continue all the way down to make new lows a day. I recognized that this is a counter trend trade on this particular move up. Let me get in, lower high, take it down to the next support. That's it. So we got into the trade here. We got out of the trade on the next candle. That one there was much nicer. It was about a 24% win. That was my second and final trade for the day. Then we started talking about this. Now, I just want to show you guys that these things are things we talk about in advance, okay? Right here, one of our members who's killing it in our room, by the way. This is one of one of the ladies that I was talking about in yesterday's video that came in here losing a ton of money, hemorrhaging money, came in here as in our community. And she is now making a very, very comfortable living after 9 months, if I'm not mistaken. Correct me if I'm wrong, Lisa. Paying herself very, very well. Big weeks, big days. She's killing it. And all she did was less of what doesn't work and more of what does work. But we were talking about a situation. I said, it's looking like we might be setting up for a blow-off top. Okay, now she asked, here's your timestamp, 10:22. So this means we were talking about this at 10:22. She said, what exactly is a blow-off top? I said, let me explain. So at 10:22, which is right here on the cues, okay, right here, I said to everybody, I said, guys, most of the top 10 was red at open. It's now pushing closer to green. Everything seems to be trending up. Okay, we've recovered nicely from the low in pre-market. We're putting in higher lows. I said, but let me draw you a visualization. Do you see this red box here? Now, this doesn't take indicators other than these things right here. Your two eyeballs. You need to trust your eyes and understand what is happening here, okay? I told everybody, I said, guys, this right here is a block of sellers. Every time SPY, or Qs in this case, has made it into this area, it's being rejected. What causes price to stop moving up? Sellers shorting the market, whatever it is, right? Sellers stop the move up here. The buyers worked their way back up into that box. New sellers or existing ones had to double down or add to their position, or new sellers coming in to short it again. We get back up to it. More sellers got to put more short in there to keep it from going up. And it keeps doing this, okay? So every time we get back into that red box, there's being more effort exerted on the seller side to keep it from continuing through there. So all you're doing is building up a huge level of selling pressure. Well, along that same front, we're also putting in higher lows, which is buyers getting stronger, right? So initially, when your sellers knock you down to support, which was right here, okay, the buyers, which we knew existed here because it's support, step up, they buy us back up, we run into the sellers again. The sellers say, nope, not today. They push us back down, but look at what starts happening. When you can't make it back down to the support you just bounced off of, that means that the buyers are getting more aggressive. They're moving their positions up, like they're advancing, okay? They're trying to put more and more pressure. So they're taking 5 steps forward, 4 steps back, 5 steps forward, 3 steps back, 5 steps forward, 2 steps back, until they can finally put enough pressure on the sellers or enough pressure from enough buyers to get us through this red box. So what I meant by a blow off top was, guys, we're watching selling pressure build up in this situation right here, and we're watching buyers get stronger. If we get through the top of that red box, we are likely to get a relatively explosive move, a blow off top. That's what I called it. You can call it, what she referred to it as. It's like shaking up a soda can. And then you open the top. All of that selling pressure that exists there has to close by buying their positions closed. That is going to add to the buyers that were already trying to push it through. Now you just turned a bunch of sellers into buyers. This was a beautiful move to the upside right here. It's that candle that we were talking about, it happening. Look at the move that resulted after that. Huge move. Now, I put these everywhere we were running into a resistance on the Qs. Okay. Now, had another person asking, Jimmy, when would you be looking to get into calls if we missed it here? We ended up picking 1036 because at 1036, we were, where was this? 1036. Yeah, I told everybody if we get above 499.83, okay, I'd be hoping to make it up to at least this halfway point at $500.66. If we get through that, we're looking for 501.50. Okay, everything's trending up. ADD's still moving up. And I told everybody, the only thing that would keep me out of this is if ADD started to go down. Now, this brings in my next situation. Okay, I had a gentleman get into the trade. Now, as you can see, ADD never even took a breather around this time. Okay, so ADD is pushing up. Oh, and I told Lisa that I'd like to see ADD printing green while we come out of the top of that box as well. Okay, so this box here on the Qs, blow off top, ADD was already printing green. This was a go from the get-go. I didn't trade this. I was done for the day, but a whole bunch of people got into that trade and made some good money, and I'm thankful for that. Okay, now, here, we can get a close above resistance on Qs, usually what we're looking for, or SPY. What we want to see is we'd like to see the Qs stay above support at 1034. Okay, the support right here. We broke resistance. This is a problem. Qs close below that support. That was a very uncomfortable situation. Again, I'm not in this. Fortunately, between ADD and SPY continuing to buy up, we really never even got back down to the SPY support that we were trying to stay above, which was right here at 586.84. So we did move up. We did get a little bit of a pullback, put in a higher low. That's a reminder that higher lows are bad for puts and more likely that we break resistance, not hold it. We got up to the resistance. We pushed through it. It just kept going up. Now, here on this trade right here, this gentleman bought in, okay, around this time. Actually, he bought in on this one. I was recommending that he takes his profit here because Qs at that time was reaching its, where were we? What were we looking at here? Was it SPY? There was a reason we were considering taking profits here. Why was it here? Was it just because we were getting close to this? I don't remember what it was. But I said, hey, you might want to consider taking your profits as we near this line up here. At this point, I think he said he was up right around 18%. Now, admittedly, we continued up all day, and he held this the whole time. This young man ended up stopping out of this trade somewhere up in here with profit, but about 22% instead of the 20% down here. Why? It's the things that most people aren't thinking about when they're doing these trades. It's not that late in the day, but what was happening throughout this was volume was dropping, volatility was dropping, and this move was not very aggressive. It looks like a nice clean move to the upside, but man, when you've got theta, drop in volume and a drop of volatility going against you, this doesn't pay a lot more. And the entire way up, he's following a strategy that's keeping him in the trade despite his profits not going up. So my question was to him, I'm like, dude, are you just going to wait for a big red candle to rob you of all the 20% you could have had here after a 3-minute trade? Here you are an hour later into the trade and you're at the same 20%. Guys, if your strategy is holding you in a trade that's not paying you more, that's not a good thing, right? Because all you're doing is you're increasing your exposure to risk, that is time in the trade. Every time we got a pullback like this, you were going well below 20%. Okay? That's not a good thing. It's not comfortable. He was uncomfortable the whole time. I'm glad he got out with profit. But was it worth it? I mean, you literally held on to a trade for an hour longer to make the same money. Now, this isn't typical. A lot of times you'll get volume stays up, and volatility stays up or increases. And theta is not really the biggest problem at this time of day. But if you notice that your contracts aren't giving you more value, even though we're moving up consistently, what's the point? You run into a situation, and all I could do is I said, dude, please just trail your win, okay? Because I'd hate to see you stay in because you're staying above a moving average or your whatever, strategy he was using. It's not mine. But his thing is, he's like, yeah, the strategy I'm using has a 54% win rate. And I'm like, okay, but what does it say about what are you supposed to do when your contracts are no longer gaining value and they're losing to time or they're losing to a drop in volatility? I got to follow the strategy. I'm going to stay in because the moving averages say I have to. Guys, you gotta understand that sometimes there's a reason to use the ejection handle. Okay, nobody can see the future. I would have loved to have seen this thing take up at a more aggressive pace and pay him a fortune. I would have loved to see that. But he was an hour into it complaining the entire way about how he's not making any more money. I'm like, okay, well, at what point are you going to just accept the fact that you may have topped out and remove the risk of giving it all away? So fortunately, he did. This was the last trade that we actually were looking at. Again, it's at 1036. But if you stayed in, you could have made a little bit more perhaps, or you could have taken profits up here, whatever the case was. Later in the day, again, I got back around 115, 120, and we started to pop up from here, but we had already decided to call it the day. We closed the gap, or we got to the pink line on both SPY and Qs. And that's pretty much it. So today was a little weird. The point is, from this morning, a lot of folks wanted to play puts, and I was doing, for myself and the community, really, really trying to help people stay away from puts because the chart was telling us it's not time for them. When we found the time to do it, we got to capitalize on that move. It was the biggest pullback of the day, I think, except for this right here. Okay. I wasn't looking for it to drive all the way down, make a new low a day. I wasn't looking for any of that. I just wanted to find the best time with enough space to make money. That was it. Okay. As you could see, we were looking for calls. We found a reason for puts. We found calls. We found calls. There was no talk of puts today other than this. And this we had to be patient for. So again, the best move of the day came at 1028. We saw it 6 minutes. We saw the scenario. So if you watched yesterday's video, and I tell you guys, remember, no trade should ever sneak up on you. I'm trying to show you this is what we do every day, starting with the call put scenario. 5 minutes before open, I'm telling you what resistance I want to see, where I expect it to go, so I can play it when it happens. Simple. I'm looking at this situation here 6 minutes before it becomes a trade opportunity. Be prepared. You have 6 minutes to decide if this is something you want to try or not. Otherwise, you skip it. But to think that you can't spot likely chances of the chart moving in a direction that is, I don't want to say predictable, but we're expecting things based on probabilities. Higher lows pushing up against resistance is a wedge that typically breaks to the upside anyway. But because of the size of the block of selling that was taking place there is why I considered it to be a more likely chance to be an aggressive move if we got above it versus just a normal breakout. Okay, this produced a nice move to the upside, and it was not a surprise. Okay, so that's pretty much it, guys. Trading is not easy, okay? The technicals are easy. The emotional part is not. And today, a lot of emotions were running high because of this move down. It's very, very hard to convince yourself to play calls after you see a move like that. I'm not denying that. I totally get it. But my message to the group today was, if you know that you can't see anything other than puts, don't trade until the chart starts trending down. Because if you choose to continue to trade with a put bias on a day like this, every new high of day and every line of resistance, you're going to buy new puts, and you will have paid dearly for that today. Okay? So again, guys, thank you for watching. I hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, we'd love to have you. There's a link down below. Come jump in, give us a chance. I love seeing the pink names in there. Pink names are my temporary members that are on their free week, several of which made money for their first day in the community. Kudos to you guys. And for those of you who are in the community, my paying members, we're going to do a live charting session tomorrow morning. We tried to do it today, but with how quickly everything was moving, it was kind of not a good time to explain everything because everything was moving so fast. But that's pretty much it. So I hope you all crushed it today. Right now we have a 3-to-1 green to red ratio, which is not bad, all things considered, because I expected this to hurt a lot of people this morning with a bias situation. And that's pretty much it. So thank you guys. Till tomorrow. I love you.